Bitcoin today. A snapshot. Bitcoin, the world's first cryptocurrency, continues to fascinate investors and the general public alike. As of today, June 5th, 2024, Bitcoin is trading at. Despite its price swings, Bitcoin remains a topic of intense discussion and debate. From its humble beginnings as a fringe digital asset, it has evolved into a global phenomenon. Its decentralized nature, operating independently of central banks and governments, has attracted both praise and scrutiny. While its future remains uncertain, one thing is clear: Bitcoin has left an undeniable mark on the world. The current price of Bitcoin provides a snapshot of the market sentiment at this particular moment. A single tweet from an influential figure or a change in government policy can send ripples through the market, causing significant price fluctuations. Understanding the factors that drive Bitcoin's price is crucial for anyone looking to navigate this complex and evolving landscape. Charting the course recent trends in Bitcoin. Bitcoin's price has been on a roller coaster ride in recent months. After reaching an all-time high in November 2021, it experienced a significant correction. Several factors have contributed to Bitcoin's recent price movements. The macroeconomic environment, characterized by rising inflation, geopolitical uncertainty, and interest rate hikes by central banks globally, has weighed on risk assets, including cryptocurrencies. Despite the recent downturn, Bitcoin's market capitalization remains significant. As of today, Bitcoin's market cap stands at. Understanding these trends is essential for investors and anyone interested in the future of Bitcoin. By analyzing past price movements and market capitalization changes, we can gain insights into the factors that drive Bitcoin's value. Bitcoin's tomorrow, expert predictions and price forecasts. Predicting the future of Bitcoin is a fool's errand, some might say. The volatile nature of cryptocurrencies makes it challenging to forecast their future accurately. However, that hasn't stopped industry experts from making their own predictions. These experts analyze market trends, technological advancements, and regulatory changes to form their opinions. Some remain optimistic, believing Bitcoin will reach new all-time highs, driven by institutional adoption and increasing global awareness. They argue that as more companies and financial institutions embrace Bitcoin, its value will continue to rise. Others are more cautious, pointing to regulatory uncertainties and the emergence of competing cryptocurrencies. They highlight the potential for government intervention and the rise of alternative digital currencies as significant risks. One prominent Bitcoin bull is Cathie Wood, CEO of ARK Invest, who predicts that Bitcoin could reach $1 million per coin by 2030. Wood's prediction is based on the belief that Bitcoin will become a standard store of value, much like gold. On the other side, we have prominent economists like Nouriel Roubini, who believes that Bitcoin is a bubble and that its value will eventually collapse to zero. Roubini argues that Bitcoin lacks intrinsic value and is driven purely by speculative mania. The wide range of predictions highlights the uncertainty surrounding Bitcoin's future. This uncertainty is fueled by the rapid pace of technological change and the evolving regulatory landscape. While some experts see it as the future of finance, others view it as a speculative bubble. The debate over Bitcoin's legitimacy is ongoing, with strong arguments on both sides. It is essential to approach these predictions with a healthy dose of skepticism and to conduct thorough research before making any investment decisions. Investors should consider the potential risks and rewards and stay informed about the latest developments in the cryptocurrency market. Additionally, it's crucial to diversify investments and not to put all financial resources into a single asset. Diversification can help mitigate risks and provide a more balanced investment portfolio. Consulting with financial advisors and staying updated with market trends can also aid in making informed decisions. The world of cryptocurrency is ever-changing, and staying educated is key to navigating this complex landscape. Navigating the Bitcoin labyrinth, risks and rewards. Investing in Bitcoin, like any investment, comes with its own set of risks and potential rewards. Bitcoin's decentralized nature, while a strength in many ways, also presents unique challenges. One of the most significant risks associated with Bitcoin is its volatility. This volatility can make it challenging to value Bitcoin accurately, and investors can experience significant losses quickly. Another risk is the potential for regulation. Governments worldwide are still grappling with how to regulate cryptocurrencies, and any new regulations could significantly impact Bitcoin's price. Despite these risks, Bitcoin also offers potential rewards. Its limited supply, capped at 21 million coins, makes it a scarce asset, which could drive up its value over time. Ultimately, the decision of whether or not to invest in Bitcoin is a personal one. Section 5. Bitcoin and the global economy. A symbiotic relationship. While Bitcoin was initially conceived as an alternative to the traditional financial system, its growing adoption has led to increased integration with the global economy. This integration has implications for both Bitcoin and the broader financial system. One way in which Bitcoin is intertwined with the global economy is through its price, which is influenced by macroeconomic factors such as inflation, interest rates, and geopolitical events. Moreover, Bitcoin's growing acceptance as a payment method by merchants worldwide further connects it to the global economy. When businesses accept Bitcoin as payment, they are essentially acknowledging its value and integrating it into their operations. Understanding this relationship is crucial for policymakers, businesses, and investors alike. Section 6. Bitcoin in the age of inflation, a hedge or a gamble? With inflation soaring globally, investors are increasingly looking for assets that can protect their wealth from the erosion of purchasing power. Bitcoin, with its limited supply and decentralized nature, has emerged as a potential hedge against inflation. Proponents of Bitcoin as an inflation hedge argue that its limited supply, capped at 21 million coins, makes it immune to inflation. However, critics argue that Bitcoin's volatility makes it a risky hedge against inflation. Bitcoin's price can fluctuate wildly in short periods, which can erode its value and make it an unreliable store of value. Investors should carefully consider their risk tolerance and investment goals before investing in Bitcoin as an inflation hedge. Section 7. The regulatory landscape, a cloud of uncertainty. The regulatory landscape for Bitcoin remains uncertain and fragmented, posing both challenges and opportunities for the cryptocurrency. Governments worldwide are grappling with how to regulate Bitcoin and other cryptocurrencies, with some taking a more favorable stance than others. This lack of regulatory clarity creates uncertainty for businesses and investors operating in the crypto space. In some countries, governments have embraced Bitcoin and other cryptocurrencies, creating regulatory frameworks that foster innovation and attract investment. However, other jurisdictions have taken a more cautious approach, expressing concerns about the potential risks associated with cryptocurrencies. The lack of regulatory clarity creates a challenging environment for businesses operating in the crypto space. Section 8. Adoption and innovation, the future drivers of Bitcoin's value. As we look ahead, two key factors will likely play a significant role in shaping the future of Bitcoin adoption and innovation. Increased adoption of Bitcoin as a payment method, a store of value, and a technological platform can drive demand and increase its value. Similarly, ongoing innovation within the Bitcoin ecosystem, such as the development of new technologies and applications, can enhance its functionality and appeal. The adoption of Bitcoin by mainstream institutions and individuals is crucial for its long-term success. Innovation within the Bitcoin ecosystem is equally important. The development of new technologies, such as the Lightning Network, can enhance its functionality and make it more attractive for everyday use. The interplay between adoption and innovation will be critical in determining Bitcoin's future trajectory. Section 9. Bitcoin versus traditional assets, a paradigm shift. Bitcoin's emergence has challenged the dominance of traditional assets such as gold, stocks, and bonds, offering investors an alternative way to diversify their portfolios. Like gold, Bitcoin is often viewed as a safe haven asset, a store of value that can protect wealth during times of economic uncertainty. However, unlike gold, which has a long and established history as a store of value, Bitcoin is a relatively new asset class with a limited track record. Bitcoin also shares some similarities with stocks, as its value can fluctuate based on market sentiment, news, and technological developments. As investors seek to navigate the evolving investment landscape, understanding the similarities and differences between Bitcoin and traditional assets is crucial. While Bitcoin offers potential diversification benefits, it also carries unique risks and volatilities that investors must carefully consider. Section 10. The future of finance. Is Bitcoin the answer? Bitcoin's emergence has sparked a broader conversation about the future of finance. As technology continues to disrupt traditional industries, the financial sector is not immune to change. Bitcoin and other cryptocurrencies have the potential to revolutionize how we think about money, payments, and financial services. One of the most significant potential impacts of Bitcoin is its potential to create a more inclusive financial system. Bitcoin, with its decentralized nature and global accessibility, can provide financial services to anyone with an internet connection. While it remains to be seen whether Bitcoin will become the dominant force in the future of finance, its emergence has undoubtedly sparked a wave of innovation. Section 11. Conclusion: Bitcoin's unwritten chapter. Bitcoin's journey has been nothing short of remarkable. From its humble beginnings as a fringe digital asset, it has evolved into a global phenomenon. While Bitcoin's future remains uncertain, one thing is clear. It has disrupted the financial landscape and sparked a debate about the future of money. Ultimately, the future of Bitcoin will depend on a complex interplay of factors, including technological advancements, regulatory developments, market sentiment, and broader economic trends. Bitcoin's journey is far from over, and its story is still being written.